I don't see why nation states will necessarily accept that everybody's a sovereign, free digital individual, because guess what? You've got roads, hospitals, blah, blah, blah. Governments want taxes to provide services to people. That's what they do. So if you don't like it, you have to leave. Now, it's not easy. Go with your Brazilian passport, try and turn up in the Cayman Islands. It's not easy to do, or go to the United States. So, but you can. I think governments just care about the tax. And yes, the power of controlling money is important, because we've talked about that. In complex adaptive societies, money is the organizing principle to get everybody to do stuff. It's the incentive. So now we're creating these different forms of money on these other digital sovereign states. They're going to coexist, and they're going to have to learn how to coexist. One is your physical state, and the other is where you live in the metaverse. You pay taxes in the metaverse too, whether it's ETH gas fees or whatever it is. You still pay taxes. You know, this utopian idea of there's no taxes, are all free, it's bullshit. Everything has a cost in life, and that's real. And so some digital sovereign states like Solana is a cheaper tax system than the Ethereum sovereign state. You know, they're all the same. People apply a lot of kind of fancy principles, but these are all the same. And it's the same with taxes in the UK versus the Cayman Islands. You know, the UK has higher taxes, the Cayman Islands has no direct taxes. I think it's a lot of that. I think governments just want to make sure that they get their fair share, particularly if you're working in the digital world, right? Before labor, it was hard to move labor. You know, you work in a factory in Brazil, then you had to find a job in a factory in Argentina. You need to learn Spanish. You know, that's hard. In this world, none of that exists. You can continue doing whatever digital stuff that you do from
wherever
anywhere.
you are.
From wherever you are. It's amazing. And also, like, the idea is maybe countries adopt taxation systems that are different over time that's more applicable. So the taxation system here in the Cayman Islands is there's no capital gains tax, no inheritance tax, no property tax, no income tax, nothing.
So that's why you live there.
Well, no, because you actually pay it on import duty. So everything's bloody expensive, and work permits and stamp duty on housing and setting up business licenses. So they get the fees in different ways, but what it means is they don't have to go chasing you around for every single transaction, which is so expensive. It's like, well, you buy something, you pay your tax. There's no way around it. So they get perfect tax collection, essentially.
Got it.
We get a relatively lower rate, and it encourages entrepreneurship.
With your macro analysis background, what do you believe it's a realistic target to the crypto market cap for the next 5-10 years, and how do you get this number?
So it's currently about 2.5 trillion. If I look at all the other asset classes around the world, equities, bonds, real estate, they're all between 250 and 350 trillion. If I look at the total derivative market, it's 1 quadrillion. I think there's a reasonable chance of this being a $250 trillion asset class, which is 100x from here, which would be the largest growth of any asset class in all history in the shortest period of time. That will pretty much dovetail in with the idea that 3.5 billion people are using it by, you know, that's just extrapolating the growth numbers of the network. So if 3.5 billion users in 2030, well, the market cap's going to be something like 250 trillion. Yeah, it all kind of backs out pretty straightforward, just using network adoption models.
When regulations come, do you believe the market will crash? And if yes, do you think there will be a fast recovery or will be a slow recovery?
I think we probably, because of the new entrants into the market, the downside will be less big in the major cryptos. It'll still be huge in the more risky stuff. And I don't know the format of where we go, whether we keep going that log trend and we keep hitting the bottom of it in a sharp sell-off like we did this year, down 50%, then back up again, or whether we do a down 50, down 40 and trend sideways for a year. I think we'll see both of those types of price actions. So, but I don't think we get the down 80, 90. I don't think that's applicable in the market as deep as this now.
Everyone talks about these Ethereum is going to flip, Bitcoin in market cap. What's your take on that?
Yeah, but who cares?
Just flipping it.
I mean, who cares, right? They're two different things.
Yeah.
I mean, it's ridiculous.
Yeah.
So they're two different things. I think the application growth of the network of Ethereum currently miles larger than Bitcoin, and therefore ETH is still undervalued versus Bitcoin. ETH will lose market share to others, and it's the whole space will go up 100x, and nobody should care what's the largest thing here. It's the whole space we're interested in.